That was a cool intro.
You like that?
Yeah, man. Yeah, I like that a lot. Hey, good morning, all you people. It's the one and only Gorilla. He is the cowboy, and we are here. It's Algo Factory Tech. And if you don't know, now you know that on our website, Algo Factory Tech. Join us. Don't sit on the sidelines wondering if life is going to pass you by. Create for yourself the most powerful, flexible, and leverageable tool of secondary income that you could possibly do right here by learning not only how to trade, but develop the algorithms that trade on your behalf 24 hours a day, 7 days a week, right here on Algo Factory. Also, get the play-by-play on what the hell's going on in the world and how it affects local markets, and grow with us with the most vibrant community out there. One and only AlgoFactory.tech. Scan that QR code, click the link in the description box. Don't be an idiot. Join us or die.
My friend.
That was your cue to play the video, man.
Join us or die.
You mean that video?
Thank you.
Yeah. Sometimes the software lags a little bit.
Yeah.
My friend. Don't be a putz. We got Timothy Mac, and I know who he is. Actually, Timothy was in their private chat just like talking pretty early this morning. We got Mab Vet. What is up? A lot of people in the house. Actually, got a fair amount of people watching. Cool. Let's see where they are. Got a few people on X. Got a few people on YouTube. If you have questions, ask. Yeah,
Timmy Mac is the man. I know Timmy Mac. He's the man.
Oh yes, sir. Yeah, we were just actually talking about this. So
Kentucky bluegrass singer. Did you know that?
Say what?
He's also a famous Kentucky bluegrass singer.
No shit.
Yeah.
Well, that's actually pretty cool.
I'm kidding.
I like bluegrass.
I made that up.
You such a putz.
But I do know Timmy Mac.
All right. Yeah, so I went short Bitcoin, and then of course my algo told me to exit, and then it continued down. So I did talk about a drop in Bitcoin, and it is happening, but I think there is some bigger news going on besides that.
Well, yeah, what's bigger than that?
Well, Ray went ahead and talked about it. So let's do a quick copy and paste and screen share and all that nice healthy stuff. Wait till you see this if you don't know about it already. And this is right straight from CNBC, so you know it can't be fake news. Because, you know, they always tell the truth over there.
Oh, yeah, absolutely. The CNBC is a paragon of virtue.
Safe and effective. Good morning, March. Yeah. Let's go ahead and do...
March in the house. Good morning, buddy. How are you?
Let's share this.
You talking about the
screen?
I'm not going to spoil it. I'll let you bring it up. Look at that, folks. Yeah, that's. I'm sure that's totally normal. Yeah,
that's
nothing
totally
to see
normal.
there. Nothing to see there. Everything's
actually
fine.
You know, V, you did such a good treatment on the carry trade. Do you want to go ahead and tell people what that's about? Since we have you on, I know so often V the Gorilla is.
I can't. What? I can't. It's because it ties into what I'm talking about on Thursday. I can't.
Oh, you can't.
No, I'll give you a hint. This is what I said. Remember what I said? Thursday, it's going to be bad.
Yeah.
Yeah, we were talking about this before this happened, bro.
Okay, so this was like a precursor. This was the drop of the beginning of the waterfall that you're going to talk about on Thursday. Is that what's going on?
Yep.
Nice. So one of the things that we have to understand about Japan and how this might affect us, we're not going to get into today too far, but we have to understand that. So look, all of the Keynesian economists, the Fabian socialists who jay each other off to the idea of a utopia where they can have the means of production and you know, all this silliness, right? Like jay each other off, like try to keep this PG. The Fabian socialists, you have to understand who these people are. Okay, so 100 years ago, there were two groups. There were the Bolsheviks, right? Straight up commies, the Trotskyites. And then there were the Fabian socialists. And they agreed on the end result. They want communism. They want, communal property. They want, everybody has the same and all of that kind of stuff. We know what communism is. We know what it's sold to us as. It never actually happens. Any country that goes communist either turns hyper-capitalist like China has, or they just simply turn into a shit show like the USSR did and collapses. So what ended up happening here, though, is the Fabian socialists are on the other side. They agree on the end, but they don't agree on the means. They don't agree on the method of bringing about the change that they want to see. So what does that even mean? Well, the communists wanted to do it through violent revolution and very often did. Millions and millions and tens of millions of people died in these communist revolutions to bring about what they were hoping would be some kind of a utopia, at least what the people thought would be a utopia, but what ended up actually being pretty much what's the term? Authoritarianism, right? Just, top down command, centrally planned stuff. And millions and millions and millions of people died. China, Russia, all that. Now, China has become actually perhaps even more quote unquote capitalist than we have here in the US. Well, the US has become more and more socialist, and that is because of the influence of the Fabian socialists, the Fabian Society. And their moniker, their symbol is a turtle because they believe in the slow march. They believe in incremental change. They believe in changing things at such a slow rate that people will just go along to get along, right? They apply pressure here, they apply pressure there. They say, if you don't take this particular medication, you can't have a job. And they do things that really just slowly change society, and they do it through the financial system. And this is where actually the two people who started the Federal Reserve were Trotskyites. And of course, this is all theory, but there was a Trotskyite and a Fabian socialist, right? So basically, you're talking about people who really want to destroy the free market. And that's what happened about 100 years ago. And so we have become extremely socialist in this country. And one of the socialist dreams is yield curve control. Yield curve control has to do with the way that money is created in society, in Western economies, I should say. So the way that money is created, and this is going to be a very short lesson, is that they monetize the debt. So the treasury bonds are basically a promise to pay in the future based on tax collection. So your children's taxes are going to be reserved in the future for whoever holds the treasury bonds. And those bonds are created and then they're given to the Federal Reserve, who changes them into dollars. So essentially it's slavery, because that's what bonds are. Bonds are actually like when you're bonded, when you have a manacle on your a manacle on your wrist, that is a bond, right? You're bonded. And so that's what that is. And so what ends up happening, far down the road, is that you end up really not owning any of your money. You end up printing money out of thin air, and you monetize all your debt, and your entire economy is based on debt. You have a silent tax called inflation. And so here, though, Bank of Japan was kind of the experiment, because back in the like say the 80s and 90s, the banking sector was used to try to change society. There's a really good documentary out there called Princes of the Yen. And I really recommend everybody watch it. Princes of the Yen.
Great documentary, by the way.
You've seen it then?
Yep, phenomenal.
Yeah, so that it's really good. It goes from World War II, and it talks about how their economy was created. I mean, if you remember, Japan was like, they were powerful in the late 80s and early 90s. They thought Japan would take over the earth, and they remain powerful. There's not to say that they're not powerful, but everybody thought they were going to take over. So what ended up happening was they went basically to infinite QE, where they would simply print and print and print and print money. And they printed money to the point where essentially they just were like, their money was all, just thin air. Now, what really powers the economy is industry, right? There's two ways really to power economy. You have industry, where you take $10 worth of metal, and you take, I don't know, $2 worth of plastic, and you make like a camera and you sell it for a few $100s. Like you're adding value. The people who make the camera make money. The people who sell the camera make money. You're creating things, right? And then there's also, there's services, right? You are a waiter. And so instead of dealing with going to make the food and deliver it yourself, you have somebody take your order, and you pay a little bit more money for your food, but you get to enjoy yourself, right? There's all kinds of ways that the real economy works, right? And Japan produces a lot of things even still. So the real economy is in place. They have really good high technology. Like China. They're like China and Japan have some of the highest tech in the world. So even though they've gone to this kind of super high infinite QE where they're printing money with reckless abandon, their economy actually still exists. They did not deindustrialize, much like the United States pretty much has. Now, we do make a lot of things here still, but our industrial process is decades behind China. Really, it is. Sorry to tell you. We still make cars and stuff here. We still have some things, but that's just what it is. So the Bank of Japan has an entire economy based on what's called yield curve control, where what they're doing is when you make bonds, right, when you are going to create bonds to fund your economy, you have the ability to have short-term and long-term bonds, right? So you have bonds that pay off in 5 years, bonds pay off in 10, bonds that pay off in 20, bonds pay off in 30. And the way that you control the demand for those bonds is you can buy or sell them. So let's just say that you don't want the public buying long bonds. You don't want the public buying the 20-year bonds. You want them buying the short-term bonds, right? So you, as the government, buy up all of your own long-term bonds. And then what happens is you control the demand because you are increasing the demand for those long-term bonds by decreasing the supply. And then therefore the short-term bonds become more in demand, and the public is kind of forced to buy them because the buyer of first resort is the government in that sense, right? Like you have dibs. The government has dibs on whatever bonds they want. The other end is they can also sell more bonds, but usually it's done by buying, from what I've read. So if you want people to buy the long bond, if you want to do yield curve control, then you buy all the short bonds up so there are no short bonds to buy, or so the demand goes up, they're more expensive and it's cheaper to buy the long bond. And by controlling the yield curve, the ivory tower academics think that they can actually control the economy. Well, this only country that we know of that's really adopted this, that has a first world, major bank, the Bank of Japan, which is, a humongous, massive central bank, is Japan. They've had yield curve control for a time. Now they've talked about doing it here, and they've actually kind of done it here undercover. They've undercover yield curve control here in the States. It is legit real, but it's not done officially, right? Well, Bank of Japan is basically, and I know the Gorilla is going to get more into this, so stop me anytime, Gorilla. Bank of Japan, in a sense, they're kind of a pressure relief valve for the stock market. So
Boom.
You got it? Or you want me to stop?
No. Keep going.
Okay.
I want you to talk 99% of this because, like, remember when a major drip on Thursday? It's bad news. You ain't gonna like it. Well, you're gonna like it. We're all gonna prepare. We're all gonna profit.
We're gonna do great. But most people will not.
We're gonna do great.
Yeah.
Exactly. So, this has to do with it. One of the things we talked about is it's funny. Like, last week, me in the boardroom, we were talking about what's going to happen if the BOJ gets rid of yield curve control. What's going to happen? And one of the things we said, well, it could only happen if XYZ happens. Right. Well, XYZ happened last week.
Okay. So basically there are people who actually join Algo Factory. Zap the QR code, the top right-hand corner, algofactory.tech. There are people who join us, right? And they do it just for the Thursday drips. And we do Thursday drips anywhere between 3 and 5 times a month. And sometimes it's not on Thursday. So it all depends on when the data comes in. Like, the world doesn't plan itself around our Thursday drips, right? But when the data comes in, it's usually about once a week. The Gorilla comes in and does this. And what I'm about to talk about right now should give you a clue as to how big of a news this is, because we're going to get into it. I just gave you a little bit of history on yield curve control being a communist, really fascist communist dream. Look, what's fascism really? The Mussolini definition of fascism, who is considered the father of fascism, says that it's when corporations and governments align, right? So from that sense, you have complete fascism, like in that, economically, that's what's going on here. It's what's going on in Europe. It's what's going on like pretty much everywhere. And so to have yield curve control is like the socialists' version of being able to completely control what's going on, or at least so they think, in the economy. Now, there's some other theory about that. We're not going to get too deep into that, but just understand yield curve control is like a socialist thing, which is also a communist thing, because really, like, there's no difference. You start with socialism, you end up with communism. You keep going down that path. You have to stop the socialists if you don't want communism, right? Let's not even get into that, but let's talk a little bit about what the JPY is, what the Japanese yen is in the world, okay? In the world, the Japanese yen is a pressure relief valve for the U.S. stock market. Why is the U.S. stock market so important to people outside of the U.S.? You would think it only really matters in the U.S. Oh, that is so not true. In the post-World War II Bretton Woods setup, where the United States was to be deemed the world's reserve currency, the way it worked was that all of the countries in the world would hold dollars in reserve. That would be their main reserve currency, right? They would use those dollars for international trade. And what they would do is produce items. Germany would make cars. France would make wine and cheese. All these items would come into the U.S., who was the biggest consumer at the time, probably still is. China's probably beating us now, but whatever. And as all those goods came to our country, we would send dollars out to all those other countries, right? And before 1971, supposedly those dollars were backed by gold. So what ended up really happening though is that we started cheating before 1971. People don't want to admit that, but it's pretty much, I think, verified. And we were printing money out of thin air. So we essentially were stealing from other economies, right? Printing dollars out of thin air, getting all these goods into our country. And then, of course, when you have a bunch of goods come into your country for basically free, your country's going to prosper. And we had the 1950s and so on and so forth. So what ended up happening with the system is that all those dollars that went to these other countries would come back into the United States, into the equities market. That was the deal. The deal was made to where, like, Germany makes cars and whatever else, and Germany sends those cars to the US. US sends them dollars. Germany takes those dollars and puts at least a portion of them back into the US stock market, the equities market, right? So
it's called importer of last resort. That's what that system you just described, folks. That's what
importer of last resort.
Correct.
So we're giving you the plumbing of the way the world really works, okay? And this is why the dollar losing its reserve currency status is so such a big effect on the world, because the entire world works on that whole system. Okay, so why does this yield curve control matter? Why does this make a Japan negative rate matter? Okay, it matters because when the stock market goes down, money goes into the Japanese yen. And when the stock market goes up, money flows out of the yen into the dollar. The yen is essentially like, they can produce as much as they want. It's a massive control. And in a sense, the Japanese are tired of letting the yen go to trash. The Japanese want to protect their currency now. Now, considering that the entire world runs on the system that I just described, that was put into place nearly 80 years ago or whatever it was, the fact that the Japanese yen would stop yield curve control tells me, I don't want to say it, V. I don't want to say what it tells me, because we want to probably save that for Thursday.
Well, you can say a little bit of it. And then the meat and potatoes we'll get into on Thursday.
Okay, so Japan's a powerful country. In fact, I have tremendous respect for the Japanese people and the Japanese culture. And ever since World War II, Japan has been treated as a vassal state. Now, of course, we had terrible things happen. I'm not saying that their history is perfect by any means. We had a lot of terrible things happen, right? It's just, they're whatever. I mean, I'm not excusing any country from any of their wrongdoing. Our own country, on that list, very high on that list, perhaps highest. But Japan and their people they're unified, they're nationalistic, they believe in their culture, and they want their country to remain powerful. And they do not see themselves, if you ask me, and I'm only saying this just my own opinion, I'm not in the Japanese mind, but I would venture to guess, if somebody asked me, I don't think that they would see themselves as a vassal state. But the United States treats them as a vassal state. And a vassal basically is like, we own you. So I don't think Japan sees himself that way. And I think that what they have done is they have operated how they've had to operate in order to maintain their power. And now that this is going on, this should tell you about where the power centers are shifting. For Japan to be able to break away from a system that has basically been a stabilizing and powering force for the U.S. equities market should tell you that Japan is no longer quite under the same level of like command and control that they used to be. And for that to be the case, that's a key component in the world's economic structure, right? So if that happens, we can expect a lot of change in the equities market. And I don't know if we want to go into that. Should we look at the Dow? Should we look into that, V, or do we want to save that for Thursday?
No, let's look into that. Go ahead.
Okay. All right. I don't know how much, the gorilla comes at, like, first of all, I already have the yen up. So let's look at the JPY. And we're going to look on the daily. Now, if you looked at the charts, it doesn't seem to be reflected, right? But there, again, Tom Luwanga, whose work is really just some of the best stuff I have ever heard. I think I'm going to go back on subscription with him because he's just called this thing out. He's like basically audibled this thing. But this is the Japanese yen versus the dollar. This is the dollar going up against the yen. And so essentially what happens is, over history, you can see that the yen gets weaker and weaker and weaker, and then it gets protected. Weaker and weaker and weaker, and then protected. Weaker and weaker, and it's approaching this high again where it's reached the level of weakness where the Japanese are willing to defend the yen, right? And it seems to me that for whatever reason, this level since maybe like since a year and a half ago, October of 22, That has been the level that has not been allowed to be breached. And you can see how it was funneling up into this area. Now, if you remember 2 weeks ago, this drawing that I did was 2 weeks ago. And I did tell you all that if we see the yen pop above and significantly stay above or pop below here, it means that we would see a major change in the world economy. That's what I said. Now, what is now happening? We're seeing the news first, which is rare. We're seeing the news first. Now it might be that there are other controls in place, right? But Cool Cat just said it in the comments, and this is the big punch. Put it up on the screen. Ding a ding a ding ding ding. You see that?
Boom.
You see that?
Boom.
Yeah.
Oh man.
Yeah.
Yeah.
So
I'm not. I want to say so much, but I have to. I have to hold to Thursday. I have to hold to Thursday.
Yeah, I don't, and that means that in order for you to understand what just got said, you cannot be just listening. You had to watch. Yep. So I'm going to have to ask anybody who's just listening to go back and rewatch, because what just got said in the comments should tell you a lot. Okay, so let's leave that behind. Let's take a look at the Dow. Cool Cat cutting us off at the pass. I love it. Cool Cat is one of the few people in this game I've actually met in person. I have family in DC, and I went out to visit them, and Cool Cat and I met. Cool Cat's been with us since 2018. Let's see here. All right, so I have a look at the Dow here. Dow to all-time highs. I mean, the Dow's did nothing but go up, and we've been talking about this publicly for a long time. This is not what I'm about to say is not some kind of a it's not some kind of revelation here what I'm about to say. This is, I mean, if you just watch Rogue News, watch anything we say, we're not going to see the stock market melt down. We might see a strong correction in the stock market, right? Like there might be a strong correction in the stock market, okay? But we're probably going to see it melt up. This is something that we've talked about. V, what has been the print the t-shirt conversation?
Dow 50,000.
Dow 50,000 print the t-shirt, V says.
Yep.
You guys
Dow
see
40, Dow 40 first, baby. Dow 40, then Dow 45, Dow 50.
Well, where's Dow now? It's right. It's at 39,185.
Yep, we're getting close.
And it topped out at 39. So 39,700 is where the Dow topped off.
Yeah.
Topped out. And I can tell you right now, this move up is like, to understand this price action, this is a weekly chart. You're looking at the weekly chart. So this is literally like this many weeks of price being kind of forced upwards. I don't know that I would wedge this. I probably would just have it as a channel. Usually when you see this, it can mean one of two things. This could be a sideways accumulation, and then price rockets up from there. Or it can also mean the price is slowing down and comes down. But what this does mean is that some kind of change is coming. If this were Bitcoin and I saw this kind of price action on the weekly, I would expect Bitcoin to rocket up after this, because that's the way that Bitcoin behaves. And you have to know your asset class. Now, the stock market, let's see if I can find like a similar look here. Stock market is going to be similar just because of all the QE, all the money getting crammed into the stock market.
Hey, buddy,
right?
I have my hard stop. I got to jump.
Okay, yeah. Are you going to come back?
Yeah, I'm coming back. Bye.
So, I would expect possibly a pullback and then more up on this. The stock market is probably just going to continue up and up. And that does not mean that the economy is like super strong. But what Bitcoin might do, that's what's going to be interesting. We'll take a look at Bitcoin before we go on to the private show. Now, Bitcoin is in the middle of a pullback that I did say was probably going to happen. And so, we have the having pullback possibly happening right now. There's a lot of liquidity. I looked at the liquidity nodes this morning. I would say my most likely place for price to go is going to be just above either like say 53,000 or maybe even down to like 49,000. So as Bitcoin, it may never make it there. We do know, at least we're told, that the large players continue to buy Bitcoin regardless of the price, but they are oftentimes buying it over the counter. Although a lot of the OTC desks are running out of funds too. So if these large players have to resort to going to the exchanges to purchase Bitcoin, right? If they do, then you're going to see this price continue to rocket up. And they are supposedly, reportedly, continuing to buy Bitcoin regardless of the price. They don't care about pullbacks. They don't care about TA, nothing. They just continue to buy because they need Bitcoin for their ETFs to work. In order to be able to have a place for all the people to buy their ETFs and to keep their ETF on kind of some kind of par, right? They got to continue to expand their Bitcoin holdings in order for that to work. So as long as people continue to have ETF inflows, as long as companies have inflows like that, they will continue to buy Bitcoin because they make money whether Bitcoin goes up or down. They make money on fees. So they're not as concerned about holdings. And I mean, and they also are pretty confident holdings will continue to go up. So all of that to say that Bitcoin, I think, will continue to go up. And by the way, let's do a quick forecast. Now, where could Bitcoin go right now? I'm going to do what's called the fib extension. For those of you at Algo Factory, you know what that's about. We've seen a 382 pullback already, but I think we might see deeper. Cool Cat, you've been saying the 618 has been pretty reliable lately, so we might see like 55,000. I have 53 for a deeper wick down if it's kind of a panic sell, but I'd say 55,000 on the 786 is probably pretty good look. So 53 to 55,000 is realistic on this pullback. To go below 50,000, it could happen if there's like a panic sell. But the way that things are moving right now, I don't know that it's going to pull back that far. And what's going to happen is as price pulls back, I just continuously look at my algorithms to reevaluate, right? That's how I roll. I let the algos tell me. And right now, the algos do say there's at least going to be more pullback for now. It might not last very long. But once that pullback is over, our next targets to the upside, because we'll be in price discovery at that point, are going to be like 80,000. I actually would take that down to about 78. I look at 78,000, but 80,000 is like the actual fib level. And then you're up to 88,000. And 88,000 is key. I'd say once this pullback is done, right? Once this pullback is finished, and it could be finished like next week, week after, the halving is not until about a month from now, a little less than that. It doesn't mean price isn't going to jump up before that, though. Price will head up before the halving. I mean, I don't mean will as in it absolutely will. I mean, it will as in it has. It has and it can, to make that language proper. It has before and it may again. It could. And so if that happens, we could see a pullback look like this and then price just continue up like this. So I would be looking at about 88,000 as an important number. Plus, if you're over in China, that's they like 88s over there in China. Lots of money going into Bitcoin over in China. So this is what we got for the public live lab. Again, thank you all for coming on and watching. I know this was a little more on the macroeconomics, but I cannot tell you how huge this BOJ news is. I tried to explain it, and if this bit of history that I gave you, you might have to watch it again. But some important things to look at, like if you want to have a deeper look into this, you can read The Creature from Jekyll Island, right? Which is a great book. And you can watch The Princes of the Yen. Okay, so The Creature from Jekyll Island, I really recommend that anybody reads that book. I even posted that on X recently. So The Creature from Jekyll Island, I'm going to put that on the screen right now so everybody can actually see it. And as that's populating, I will also go ahead and type Princes of the Yen. So The Creature from Jekyll Island is written by Edward Griffin. Okay, read that. You want to read that. It's going to teach you about the history of the way that our whole financial system was created. It's going to talk about how it works even to this day. Okay, so read this book. Read it. It's not too late. It's not too late to get this info. Number 2, I would watch The Princes of the Yen. Okay, and The Princes of the Yen is Japan's. You can watch this on YouTube. You don't have to read this. It's on YouTube for free. It's Japan's central bankers and the transformation of the economy. Right? It's using banking and financial pressures to change to affect societal change. So read those. Thank you all for coming. We're going to hop over to the private live lab right after this brief minute.
Join us or die.
Zap that QR code, top right-hand corner. We teach people how to extract money from the market. We teach them how to build their own algorithmic trading method. It's like, doesn't have to be computerized. It's your own method that is with, just, you can just do trading like you always do it. You don't have to create a program. You don't have to code anything, nothing like that. But once you do have a trading method created, you can use that method once you've tested it, once you've created it, it's your method, and you're going to have the psychological strength to stay with the trading, which is the biggest key. We teach all that stuff. Nothing's investment advice. Everything is all about you taking power back for yourself. It's a beautiful thing. Thank you all for coming on. We're going to hop off of the mainstream here, and we're going to go over to the private lab. We hope to see you at Algo Factory. Trade your job, upgrade your life. Catch you.